Welcome, everyone, to today's Insightful Accountant Future Forward event for August, covering vertical niches. My name's Bill Murphy. Everybody knows me as Murph. Today's session is Mastering Multi-Entity Analytics to Win High Profit Advisory Services. Our speakers are Brad Adams and Charles Nagel with Qvinci, and myself. We'll learn more about today's program in just a couple of minutes. Before I turn the event over to Brad, I have an announcement and some housekeeping to take care of. While we're discussing these things, we'll also have a poll. So, Matt, go ahead and open that poll about Be Insightful, if you would. We offer 9 tracks of information, including things like tech stack and migrations, HR marketing, business development, a whole group of things like that. And members have access to 30 CPE credit hours a year, workshops, a variety of premium content. For example, last month I inserted a white paper about migrating from QuickBooks Desktop to Sage 50. In July of 26, we're also hosting a 7-night Caribbean working cruise, during which you have the time to work on your business in sessions that are curated and led in such a way that you'll walk away from the cruise with a strategy to help your business grow and be sufficiently relaxed to give you the energy to do that. So let's go ahead and close that poll. And if you're here for CPE, this is CPE eligible. You've got to be here for at least 50 minutes. You have to have answers to at least 3 polling questions. If you meet that, we'll send you a certificate within 24 hours. You'll receive an email following today's event with a link to the archive that is posted to our YouTube channel. And you'll also receive a copy of the slide deck that Matt will drop into the chat at the end of the session. But we aren't using chat. We're only using Q&A for today. So if you've got questions, be sure to put them in the Q&A. And with that said, Brad, I'll turn it over to you. You can go ahead and share your screen.
All right.
We're seeing you, not your screen.
All right, give me a second here. Let's see. How does that look? Can you see it now?
Yeah, I think so.
Okay. All right. All right. Well, all right. Thank you, Murph. Let's get started here.
Actually, what we're seeing is
sharing
the
their own screen, but
presenter's view.
yeah.
Let me switch this here. Swap. Okay.
There we go.
Okay. All right. Well, thank you very much for joining us today. As Murph said, we're going to talk about mastering multi-entity analytics to win high profit advisory services. Okay. Murph indicated before, Murph and Charles are going to give their expertise, and I'm going to moderate. And Charles Nagel is the founder and chief innovation officer of Qvinci, and we all know Murph as the subject matter expert of everything accounting. So thank you guys for showing up. We're going to talk about what we're going to learn today. Okay, a couple of key things, and Murph and Charles are going to get into a discussion and review some tools in each one of these categories. Number one, we're going to learn how to automate the creation of consolidated reports in business intelligence using Qvinci's patented data collection, consolidation, and account mapping tools. Very important, step 1. Step 2 through 7, can't do it without step 1. 2, we're going to deliver multi-entity analytics and business intelligence that unlock deeper client analytics. This also works for singles, and we're going to talk a little bit about that too. We're going to establish and track location-based performance to guide strategic advising. We're going to identify trends and outliers and opportunities across all your clients. We're going to position your firm as an essential strategic partner with impactful insights. We're going to learn how to grow your multi-location and like industry, single client base through proactive advisory services. Finally, we're going to introduce you to a program at Qvinci, the Qvinci Turnkey Advisor Program, so you can scale your advisory offering. All right, here's just a couple of the top accounting firms that trust Qvinci. We do this for accounting firms of all sizes, large and small, and have been doing it for 10, 15 years. All right. First, one of the things we want to do here is we want to talk about what is the value and how do you catalyze advisor service. We have this push-pull dynamic that we build into the Qvinci software. The push, okay, for example, the KPI scorecard that Charles is going to go over a little bit later, is something clients can easily understand. It illustrates favorable versus unfavorable, green versus red, and it motivates or pushes the client to reach out to you, the accountant or the subject matter expert, to seek a corrective help. The pull, for example, is the advisory portal. Okay, it's a single view of all your clients' financial wellness. It also is illustrated in green and red ratios, and it motivates accountants to contact their clients and pull them into advisory practice. The two of those working together can only result in clients and accountants working more closely together. Okay, why are we doing this? Why is this important? There's a couple of statistics I would like to throw out there. Accounting firms that offer advisory services, 20 to 50% increase in revenue. Hourly rates higher, 100 to 300 more per hour. Higher client spend, 10 to 50,000 more annually. Okay, client retention, 120% longer. That's why you want to do this. Okay, and here's another statistic I'd like to throw at you: is 80% of all accounting firms are actively seeking to incorporate advisory service and offering. In other words, if you don't do it, somebody else will. So this is basically a background of why we're going to do this. We're going to do a polling question next, and then we're going to get into the meat of the discussion and turn it over to Murph and Charles. So Matt, why don't you do polling question number 1 for our guest? And polling question number 1, does your accounting practice service these type of organizations? Check all that apply. Companies or organizations with multiple locations or entities like franchises, multi-entity organizations that are not franchises, multi-entity organizations like dioceses and nonprofits, like industry clients like dentists, veterinarians, real estate. None of the above? Well, I'd like to learn more. Give them another second. I think 2, we'll close it up and see what they get. All right, Matt, I think you can wrap it up. All right, so we got 36% would like to learn more. We got 55 like industry. Okay, 36% not multi-entities but are not franchises, and 26% franchise. So a wide range of answers there. So interesting. So let's go ahead and move on. If you can close that up, that'd be great. All right. So let's go back to the first learning objective, which is the automation or automate the creation of consolidated reports and business intelligence using Qvinci's patented data collection, consolidation, and mapping tools. So Charles, I'm going to turn the screen over to you to go to the client wellness dashboard, and you and Murph can kind of talk about that and a few other tools.
You know, Charles, a few years ago, when you all first announced that you had this capability of going out and gathering data from different QuickBooks files, different types of QuickBooks, and combining it all, it was so amazing to me. And you've put the polish to it such that it's, in my opinion, the most sophisticated way of garnering multi-entity data, especially if you compare that to the old-fashioned way that QuickBooks Enterprise does it. So I'll let you show them about this and tell them a little about how you bring all that data into the purview of Qvinci.
Thanks, Bill. You guys seeing my screen?
Yes, sir.
Yes.
Okay. So at the core, if you're going to service, and I'm going to say multi-entity, it can be franchises, dioceses, a multi-location client, or like kinds. Like kinds is important. We have accountants doing that. Like Brad said, the baseline is you got to be able to automatically collect the data, and then you have to be able to standardize that data. So when you're going to do business analysis across a plurality of files, you have to be able to standardize the chart of accounts. We own the patents on that. Once you can do those kind of things, then you can begin doing what we call interpretive reporting. In other words, take the pile of numbers and turn it into something you can make a decision with. You can find things at a high level and push into. This is the first example. When someone comes into Qvinci, we call this the portal, the advisory portal. How convenient. So these are all this is the industries that I have: restaurants, Catholic diocese, dental clients. And these are the clients, the QuickBooks file is an example, or a zero file even for that matter. So if I'm an accounting firm, an accountant, and I got 25 customers, do I really want to go in and open every QuickBooks file and dig into a pile of numbers? No, not so much. What I want to do, I want to see how my ecosystem is doing. So Qvinci takes syncs the data out of all those files automatically and standardizes it. And this is the first presentation layer, very high level. And we've rolled up all these numbers for you that are showing you period over period. These are trends. Red is bad, green is good. That's what it means. Find red, fix red. So you come in here as an example, and you say, look, I'm going to look at the fiscal year over year. How am I doing fiscal year over year? You can see the numbers automatically change. Because what I'm trying to do here is I want to find issues with a given client if possible. So if you have 100 locations, look, we have franchises that have 4,000 locations. How do I get a grasp on this? Well, every accountant is going to deal with 20 clients or something like that. So they come in, they look at this, and they go, wait a minute, what's going on here? And these are all hot. So what I want to do as an advisor is find the worst offenders, whatever that might be. And we've rolled this up for you to make it. So these are all hot, and I can go, well, wait a minute, the Diocese of Trinity's revenue, these are fictitious files. Let me use this one. Their gross profit is down 18%. So if I click this, up comes a card, and it shows me what those numbers are. Because what I'm going to ask when I come in here as an advisor, why is that off 18%? Well, here's why. I mean, here's the actual numbers. Well, so the next question you're going to ask is, okay, well, income went down dramatically. Okay, so I get that. So what does it actually look like underneath? I don't have the time to go look at QuickBooks. So I'm going to click that button, and Qvinci is going to drill into further to the P&L that shows you those date ranges. Last year, same period last year, and month over month. And I'm looking at this stuff, and I'm looking at these changes. I've got the P&L, multi-period P&L for that entity without ever opening a QuickBooks file. I don't have time to go dig this out of QuickBooks. Just show me where the noise is. And sure enough, we're looking down here, and we got some numbers here that have gone wonky, and I want to know why. So I click the cell, and Qvinci drills into the general ledger. So now we're looking at detail. So an advisor, when you're coming in, you're dealing with a plurality of locations. You need a landscape view, and then you drill down to the underlying data to find the offender. And that's probably a problem right there, that $15,000. So you get the idea. This is a top-down look, and this is where you start when you're advisory services. You want to find those locations that are in trouble in some specific way, and it needs to be like this. Collect all the data, standardize it, give me a global presentation, and let me drill down. Bill, you have any comments or questions on that?
Well, and it really doesn't matter. You're telling us that it really doesn't matter whether somebody's got a couple of subsidiaries or if you're dealing with like somebody that owns 400 franchises for Burger King, for example. You can take all that data and blend it together.
Yeah, and not only that, I'm going to tell you this. Let's imagine that you have a bunch of singles. I mean, it's conveniently, because Qvinci will standardize the chart of accounts across all locations for a franchise or a multi. But if you have a bunch of singles and they're all in different industries, well, the problem's, in my opinion, even worse because they're not aligned. You don't have any commonality there for the most part. So when you're not in different industries, this brings that view across all your singles as well as your multis in the same presentation layer, and you get to operate in the same way. Brad, back to you.
Yeah, well, thank you very much, Charles. I think I'd like you to review the buying entity P&L that for our guest, and talk about how you use that and how that exemplifies that consolidated reporting.
Yeah. So Qvinci owns the patents on everything I'm going to show you here. So imagine we automatically connecting to QuickBooks Online and desktop. And let's imagine that you have some multi-entities, and even two of them are on QuickBooks Online and one is on QuickBooks Pro Advisor Pro, something like that. Well, doesn't matter to Qvinci, even if they were Excel. And what you have to do, so I've got these three locations. This is an example of templates. Qvinci has 246 already ready to use templates that will automatically, as we say, hydrate for you or populate for you. And when you're dealing with multi-entities, you will define the desired SCOA, the standard chart of accounts, because we know that the native chart of accounts in Austin Brew and Bristol Beer Garden and Morristown Cafe are going to be different. It only happens every day because of different accountants working on there, and there are differences. Well, Qvinci will bring all that data in from these locations and put it into your standard, because these are all restaurants I'm dealing with here, okay? And they're owned by 3 different people. It's a franchise, something like that. Well, once you can do that kind of thing, then putting them up side by side to do comparisons, vertical analysis is turned on here, and consolidated totals automatically. This will happen for you in about 30 milliseconds. Something along those lines is about what it is. Imagine doing this manually. You'd have to go into QuickBooks, every file, dump it to Excel, dump it to Excel, dump it to Excel, and then try to get chart of account alignments. Who has time for that? And your clients won't pay you for that. So Qvinci will do this automatically for you, and it'll handle hundreds and hundreds of locations. Doesn't matter. Select the locations you want, give me this report, and there's a plurality of reports. And now you can do very, very fast side-by-side and or consolidated reports. Bill, did you have anything you
Well,
want to?
one thing that you and I've been talking about lately is the fact that some accountants are scared by the fact that, hey, suddenly that 3 hours they spent preparing a report now takes 15 milliseconds. And how do they justify that? But the point is that really it's the value of the product. It's that return on investment. uh, you're still providing the client with even greater information, and it's costing you less in order to provide them with more. And so, this is a prime example of that, how quickly you all can produce a report that can't be produced anywhere else, or if it can be, it's going to take hours and file after file after file.
Oh yeah, and look, we have accounting firms that do. We're going to get into a lot of really advanced kind of things. This is just a baseline example. Again, these cells are hot. You can drill down to underlying data. If you see something that looks a little wonky, like this 279 for catering, that's a little strange. That doesn't seem right. So, but the value is in the data you're going to give to your client and what they would do with it. Okay, that's the value. Brad?
All right. Well, thank you very much. Great conversation. Let's go down. Let's move on to number 2. And that's delivering multi-entity analytics and business intelligence that unlock deeper value. Okay. And this works for both multi-entity like industry and single clients for that matter. And one of our tools that we're going to use here, Charles has brought it up, is our entities at risk versus high performers. And Charles, why don't you talk to our audience about what this is and how can accountants use it?
So think out of the box here a little bit. You're an accountant, you have a bunch of restaurants. They're not related to each other. They're all restaurants of different types and kinds. With Qvinci, is the only solution I know that can do this. We will group them together anonymously so you can benchmark them against each other. We have accounting firms that do this, like in the dental area, and then they run reports that they would send to a client that shows them how they compare to other dentists or other restaurants. This report's the same way. It works on diocese, multis, anything you want to. What we've done is we've rolled up these categories for you automatically, and you can change them by coming over here and picking the accounts that you want to use against this data set of like kinds and or multi-entity kind of thing. Parishes and a diocese is an example. And you'll set these thresholds. And what we're going to do is we're going to identify all the entities, okay, that violate that threshold. This is the risk rate. We're saying, look, gross profit needs to be 31.9%, and I want you to highlight for me everybody that didn't make that, okay? And 65.4% is the average of the ecosystem. So we're telling you what the average is, and we're going to highlight for you with the ones that are at risk. They're going to violate these accounts and the parameters that you have set. How long would this take to get out of QuickBooks across 30 entities? It's impossible. You can see we've got 152 here. So you'll pick the periods that you want. You'll come in and say, well, I want to see this by month, and the data all changes. The analytics change. I'm looking at the entities at risk. Well, maybe I want to see the best performers. Who's doing well? Not just at risk, but show me all the guys that are doing well, and click the best performance, and it all changes. And we tell you who's hit these things well, and we tell you what the splits are. Okay, where these at risk, or these what the ecosystem fell. 99% fell 0 to 0.8% as an example. And when you want to color code something, you'll say, listen, I want you to show me everybody who fails 3 of the tests. These are all the yellow ones. These are everybody that failed 3 of the tests. If you have 5 of the tests, you're going to get more white in here. Show me all entities. Only show me the ones that fail. Okay, so it's a way. This is like right below the portal that we looked at earlier, where you have a landscape view across the accounts that you care about with metrics that you've set across that ecosystem, your ecosystem. Show me all the guys that are problematic. And of course, you might want to drill down from here. Bill, any comments on this one?
Well, again, you hit the nail on the head in that you can set the parameters by which you examine these individuals, and you could use standardized sets of parameters. You can build your own parameters. You can use figures off of the average to define what those key points are, whether they're good or bad. So,
yeah. And this particular report, I'll make this very clear. This is not something you would send to your client unless it is a franchise corporate, like the owner of a franchise, the franchisor. This is a tool for you to interrogate the network of units that you have, the entities that you have, and then decide how you're going to handle that. Brad?
All right, thank you very much. Matt, let's pull up polling question number 2. How many clients does your firm have that could potentially benefit from some more advanced and profitable advisory services like we've just discussed? And just trying to get an idea. So do you
this report that we're looking at in the background, I'm sitting here thinking it's a way for you to build additional billable hours, but more importantly, it's a way for you to build more advisory consultations. It provides you with the information to provide a consultation that you otherwise wouldn't be able to provide.
I agree, Murph. Matt, I don't see the A, B, C, D, and E on there, but maybe
it's a drop down.
Okay.
Yeah, there's a drop down there.
All right. Well, listen, I think that's good. Let's see what 1 to 24, 88%. So it's and that's not good or bad. Just a breakdown. So thank you very much. Let's go ahead and Charles, let's move to number 3, which is establishing and tracking location-based performance benchmarks to guide strategic advising. Okay, and this is the ranking and benchmarking analysis. And Charles, why don't you go ahead and talk about how accountants can use this to provide advisory services to their customers. And Murph, any questions you might have would be great.
So this is a summary. We've gone and Qvinci pulls all the location data, has the standard accounts across the top here. You can, again, once again, customize it for the ecosystem of units you're talking about. In this case, I chose an account called hot beverages, waste, and local marketing. In case of franchises, they care about those kind of things. And we're going to give you, according to the period that you want, this month, last month, that kind of thing. I'll give you the data across all entities, and it's a ranking report, a ranking and benchmarking report. And here's the top 10% of your ecosystem, the top 20%, and the average. I know that the average of all these entities that I've got, these like kinds I've got, this client that I've got that has multiple entities, 38.2%. And I care about everybody who didn't make it. And I'm going to come down here, and we have clients that use this right now that to great effect. And they'll sort it, largest to smallest. COGS high is, everything higher than the average. There's a bad juju, right? So, so it highlights everything above the average. These people are not buying as efficiently manage their inventory as well as these people. And we care about that. And we have franchises as an example and other multis that use this report. Location 29's COGS is 44%. We know what to interrogate because COGS is going to affect GP, which is going to affect net income. It just is. So this gives you a landscape sortable view across all the entities, and it automatically adapts to whatever industry you're in. The other thing about Qvinci is we're industry agnostic. We go all the way from dog walking franchises to tugboat franchises to Catholic dioceses. It doesn't get wider than that. Qvinci does not care. But what you will get is you'll get the business intelligence. Imagine trying to have this data across 25 units, 12 units. I got a client with 12 files. He's got 12 HVAC trucks. I want to be, and I have a QuickBooks filer classes for everyone. I want to be able to compare these things, and I want to be able to cut and paste, lift this data out of here, and put it in a report and send it to a client. Say, look, I've got your back. Did you know that this location is not as good as these other locations? And here's why. You should go do something about it. Bill?
Yeah. Again, this report also can be used for accountants who are got single entity clients, because you can load any kind of additional data you want. You can take a spreadsheet and load data, for example, from one of the purveyors of benchmarking and comparison data. So you can look at maybe you've got 3 or 4 plumbing clients and see what is happening in their area against each other, but also against the norm or standard. So the fact that Qvinci lets you plug in data from spreadsheets as well as from files, provides a great resource.
Yeah, thank you very much, Murph. Charles, we got a little ahead of time here. I want to maybe you can talk a little bit about that accountant customer we have that represents so many like industry, in this case, dentist office, but it works for any industry, and how a tool like this can be used regardless of whether or not you're multi-entity within one organization, but a group of like industry clients.
Oh, yeah, and phenomenal growth. Intuit put a survey out a number of years ago that said the average accountant grows by 2.5 clients a year. And this company, HDA, they're out of Colorado. They service dentists. And when I landed them, they had, I'm not going to say, okay, they had hundreds, okay, of dental clients, and they've grown many fold over. And what we did is we built business intelligence for them, and they use that as reporting for their clients. They're all a bunch of dentists, or it doesn't matter. They're all in that same industry, and Qvinci collects them all up and allows them to do benchmark ranking. So when you send a report, we're going to show you some analysis in a little bit. You send a report to dental client A, it compares him anonymously to all the other dentists that accounting firm is working with. So again, it's industry agnostic. If you have restaurants, you can do the same kind of thing, where you use your like kinds as a benchmarking ecosystem. And the most powerful data, there's 2 very powerful types of data. Relative data that says, here's how I'm trending, what I'm doing. We're going to show you this in just a minute, month over month, year over year, that kind of thing. And how does my detail compare anonymously to other people like me? Most clients live in a silo. They don't know, they know how they're doing, but they don't necessarily know how they're doing. They don't have a forecast, and they don't necessarily know, well, is my temp staff rate in line with what everybody else that's successful doing? So you can use these kinds of reports to use your existing ecosystem of single industry types to do benchmarking. Brad?
Thank you very much. And let's go ahead and move to learning objective number 4. And that's identify trends, outliers, and opportunities across every client location. And Bill, I think you have Charles, I think you have an example of our KPI ratios as one of the many tools we have in Qvinci, one of the 200 plus. So Charles, why don't you talk about that and how that's so important for businesses?
Now, you know, these ratios are pretty standard. I should mention there's something in Qvinci. It works on singles. If you have a single entity, in this case, it's Restaurant GL, and I got one entity here, Austin Brew. If I have a client that has 5 QuickBooks files, I can select the 5 QuickBooks files, and this report will come out looking like this, but the numbers will be automatically consolidated. So you talk about a time savings, right? But these ratios, you got to give them to a bank. Probably if you have a loan, they're going to ask for these things. I mean, you can go do it the hard way, or you can have this. And what we do is, again, we trend it. We're going to show you period over period in this particular report. And red's bad. It's going the wrong direction. So not only do we want to give you the data, it's not good enough as an accountant. I can tell you, I've been in business a long time, to give someone a trailing 12-month P&L. They're not going to see any trends there. So we believe in giving you trending along with the data set. Bill, do you have a comment on this one?
Well, you hit the nail on the head. If you have to go see your lender, you have to go see your banker. This is the kind of information they want. And Charles, you can customize the various ratios in this report as well, can't you?
Yeah, we have an authoring tool. If you know Excel, it looks just like this. The other thing that's cool about Qvinci, when you dump something out, and if you say that you jump into Excel, all the math travels, so that when you send it to a client, we're going to show you some dynamic things. So yeah, you can customize, or we can customize. So if you have rudimentary Excel skills, you can go in and change these things and add a custom ratio, or ask us to. Right.
Thank you very much. Charles, I think I'd like you to also go over the alerts and notifications part as well.
Okay. Well, I'm going to bring up a screenshot here, and I'll show it to you in Qvinci as well.
Yeah.
This is the deliverable. You know what? I'm going to take that off. Let's just hop into alerts real quick. I'm in Qvinci right now. I go to my alerts, and this is where I can set up. I got these in this particular grouping. I have these 3 dioceses. And I can come in here and I can set up alerts, say, look, I'm on a weekly alert, and it's a target, and I want to know when they hit 5,000. I want to know when they hit 5,000, or if it's an expense out of the P&L, you might make it a threshold, or an actual value. So the target's $5,000. So you'll set this up across your clients' files, right? So what'll happen is Qvinci, when you set these targets up on the P&L and or balance sheet, will automatically send you something that looks like this. So we have franchises use this a lot. I want to know when my franchises hit this or cross this and that kind of thing. So you'll get something that looks like this. It looks like a little Excel grid, and all your clients that you set a targeted threshold for will all be down here. Just be one email. You're not going to get 200 emails. You're going to get one email. It's going to have a listing of the targets and thresholds by client for the account that you set. Okay, and automatically. So I would go in and I would set some, listen, I want to know when they're going to cross this thing, and I want to know when they're not going to hit this thing. So some are proactive or positive targets, or that kind of thing, and some are where you use a threshold to really trap when someone's about to have an right? Bill, do you have any feedback on that?
This is one of the things that I personally just found out about in the last week or so, and I think it's an amazing tool because we've talked about the simplicity of running these reports, running the KPI scorecard, or looking at the portal, but this tool allows you to just wait and see. And what I mean by that is it'll let you know, hey, you've got a problem with this client, you've got a problem with that client, you got a problem with this client. Suddenly, their net revenues are down, or suddenly their gross profits are down, or suddenly their COGS have gone skyrocket. You can set those parameters on a per client basis. You can set it for all your clients.
Well, thank you, Murph. Murph, Charles said something just the other day when he and I talking. He said, Qvinci is not a reporting to app. Qvinci is a decision-making tool. And I think that the tools that you're going over with right now, and Charles is going over with it, sort of bring that into full light, because it's not just about an app. You know, reporting apps are a dime a dozen. It's about giving people the information so they can make good decisions. And if you want to become an advisor, a trusted advisor, a subject matter expert, you have to master that. Would you agree with that, Charles?
And in addition to, this is what clients want. I mean, if you really want to know it, as I've started a bunch of businesses, you've seen my work, you just don't know it. When you go into a grocery store, you see, and what I want is I want things that I understand and that I can make an informed decision on. And that's what advisory services are. You're not fixing their problem for them. You are notifying them of things they should pay attention to, and then they go make and then they go make decisions based on these markers. What Qvinci does is this facilitates the creation of that for you, right? So you don't have to go do it manually, right?
Yeah, thank you.
You know, when
Murph.
I'll just mention, this is priceless information. When you can call your client and say, hey, do you know that you've got a problem right now with your outstanding AR? Or do you know you've got a problem with your outstanding AP for that matter? Your AP's high, your AR's high. What are you doing about it? Before their bookkeeper even tells the boss, I think we've got a problem with so and so. They're going to be really impressed that you've provided them with that notice before they found it out for themselves.
Thank you, Murph. I appreciate that. All right, let's move on to polling question number 3, Matt. Okay. Would you like to automate the manual processes around data consolidation, reporting, and business intelligence to provide more profitable advisory services? Yes, no, maybe. I'd like to learn more. Okay. All right, Matt, I think people should have had enough time to answer that. Let's go ahead and close that up and see what the answers look like. Yes, 57% yes, 19% no, and 24% maybe. I'd like to learn more. So some 81% either yes or maybe. So a good response. So all right, let's move on to number 5. Positioning your firm as an essential strategic partner with impactful business intelligence. And Charles, we're gonna first go into the what if break even analysis. And why don't you talk about how an accountant would use this?
Okay, so everybody wants to know their break even point, and but break even analysis are great. You send somebody a break even analysis, they go, okay, well, what do I do with it? So what we do is we build a tool that automatically pulls the data out of your file. And by the way, again, if you had a client that had 7 files, select 7 files, it'll be a consolidated break-even analysis with what-if forecasting. Yeah, could you do this manually? There's no way in the world, and they wouldn't pay you for the time that you did it. So we pull out the controllable cost, your COGS. You can take certain things out of expenses and move them into controllable. We'll call it this, okay? We give you the ratio analysis. We calculate your break-even point. It's pretty straightforward. Break-even point's $2.36 million right here, right, for this client, for this file. And this is the analysis and all the data that shows you how you're doing. If you keep doing what you've been doing, that's your break-even point, okay? We populate that over here and we let you play what if. Why? Because I want to design a likely reality future that's better than this. Well, how do I know what to do? Well, here's a list of all the stuff. And you might come back and say, you know what? This material B cost is 15%. And I think I could do that for 13.5. Okay, that's an objective. And my Fran services fees is a 6.7%. And I'm going to dial that down to 5.6% because I think I've crossed a threshold and my royalty rate's going to go down. Subcontractor cost, I'm going to control those costs. So you come in here, start playing what if. This is a big deal because not only will you do this, when you run this report for a client, you can do this. When you send this to a client, they can also do this. Now it's hands-on. Now the client's not just getting something static, but now they're playing the game with you. It's it's dynamic business intelligence, not a stupid blank PDF that says, here's the data, hope you figure out what to do with it. It becomes usable in their hands. And I can say, well, you know what, next month's going to be a better month. I'm pretty sure it's going to be $3.1 million. So I'll put, my new amount of money in here, and your break-even points, we're going to show you break-even points going to shift. It just is. You want your break-even point to go down? Do something about it. Raise your revenue, and if you raise your revenue, also control your cost. So this gives you a way of doing this. And now, is this not better than having a budget, in my opinion? I know the two things, and if I come down here and if I come over here to these what we call non-controllable costs, I may have training expenses of 1.7%. I'm going to dial that to maybe 0. I'm not going to do any training. Okay, I'm going to knock that down. I can now begin to modify 2, 3, 4, 5 things. And that's what people can wrap their head around. This is me today. This is what I want to do next month. And then come back and verify if I did that or not. So being able to understand where you are, design where you're going, and know how to get there, and the handful of things, this is what advisory services is about. Showing them and allowing them to understand and digest and find the handful of things that they can make a decision on, that they can track. You can't. Go ahead.
Why don't you go over the cash flow forecasting, the what if cash flow, and then I think Murph has a couple questions for you.
Okay, let me close this up, and I'll bring up this one. This one's in real detail. This is a bigger version of what you just saw. It doesn't do break even, but it is a by month, by account, what if calculator. This is your running checking bank account balance, and this is your history. And we replace your history. We put your actuals in here as you move through the world, move through the calendar. And what you can do is you'll take a look at this. You can say, well, I don't want to do that. I mean, I've got consulting or cleaning. So I've got contract labor here, $2,700, and it was $4,050. I'm gonna take that down to 25%. I'm not gonna do contract labor anymore. I got to control that cost. You'll come in here, you or your client will make these changes. It's like a budgetary kind of thing, and design in a new reality. And we're going to give you actual versus what I said I wanted to do this. What did I actually do? And I can compare them, right? And this is great. My income's up, my gross profit's up, and I can control my expenses. Okay, so actual is 71,000. I said I want to do 53,000. Where did I miss it? Here it is. So this allows you to design a future. It's another template, one of those 246 predefined templates, and you'll pick the months that you want, the starting months, and monitor the bank account balance. And I can tell you, we've had people. I designed this when COVID hit. And we've had people say, I think this helped me save my business because I knew, the client said, I knew what to focus on. I knew what I needed to manage and really pay attention to. Bill?
Yeah, I think that's the key, is that you as a advisor can look at this and go, there's 1 or 2 areas that if they make a shift, and a reasonable shift, they can become profitable. And that is, once again, value information that they're not going to get otherwise. It's just something you, as a trusted advisor, can visit with your client about. Hey, you've got a problem here. If you make this shift, you're back to normal. If you make this shift, you're profitable.
And I should point out, this is an example of what we call a template in the system. You can run as much as you want, as often as you want. Go try building this manually for each client. This particular report, in the hands of a client who can also, when you send it to them in Excel, can make these modifications, you've driven your value through the roof, because you're showing them and allowing them to, you're collaborating with them, you're allowing them to, again, design a likely reality and know what they need to pay attention to, as opposed to just looking at the checking account at the end of every month and hoping it's bigger than it was last month. Generally, you're going to get what you've designed in. Brad?
Thank you very much. Let's move on to section 6, or the 6th learning objective today. and that's retain and grow your multi-location and like industry client base through proactive advisory. And Charles has got a couple of different things he's going to show you: KPI scorecard benchmarking, and some budgeting tools. So why don't you go through the KPI scorecard, Charles, and talk about how this can help someone provide advisory services?
So this automatically adapts to the client selected. Select the client with 5 files, automatically consolidated. Builds a chart of accounts that you have for that client. Automatically, you do nothing. Select the entity, select the period, click go. Okay, and it's going to automatically roll it up. And if you have a bunch of like franchises or like kinds, this is the kind of thing we talked about, that dental accounting firm. These are the average of all your plumbers, top 20% of all your plumbers. Okay. So it's all rolled up, and it compares or this is a restaurant, compares Morristown Cafe to the other restaurants, anonymized, either amounts and or percentages of income, relative data, right? And so what we do is we wrap around, we look at your last 12 months as an average, we give you wrappers low and high. We tell you what the current month you selected this period. So how am I doing? Well, 33.1% is right in the middle of your range that you have historically done. So it's black. If you do better, it's going to be green. Guess what? If it's red, you stink. This is not good. It's 12.6%. Historically, you've done 15.1, going the wrong direction. And here's the prior month. Well, the prior month was 9.1%. So period over period trending, green versus red. I am trending, it was terrible last month. It's 12.3, not as good as the prior month, as the average, but trending the right direction. But look at these two. These three trending the wrong direction. Find the X's, pay attention to the X's. You, as an advisor, do nothing. Select entity, click preview. Here it is. And here's this KPI scorecard that shows you their own trending, shows you their top 10 expenses, trended. If it's red, it's worse than the prior month. Here's the average of the last 12 months. Did you know, Mr. Morristown Cafe, that these are your top 10 expenses and how you're trending month over month and period over period? Did you know that? Of course, you're going to give them the year over year running income and net income, that kind of thing. Give them the running cash balance, year over year, month over month. And if they have AR and AP, it has an AR and AP analysis tool. So a very simple template. It's a part of a package. Select the client, click download. You get this kind of thing out. Take a look at it. And of course, since it dumps to Excel as an example, you can go in here and mark it up. You can come over here and color it, yellow if you want to. So you can do all kinds of things that will allow them to understand the areas that are important. Bill?
So not only do we have the famous green is good, red is bad here, but we've got a lot of data that, once again, a business needs to know. A business isn't interested in just looking at a P&L or a balance sheet. They've got to figure out what is working and what isn't. And there's no simpler way. This truly is keep it simple. There is no simpler way to identify those things that are working from those things that aren't working than this scorecard right here.
Well, thank you, Murph. I appreciate that. Charles, why don't you bring up your budgeting tools? Go over a little bit of that, and I think Murph has a question for you.
And so I'm just going to show you a couple of tools. Qvinci has something like 15 different variations of budgets. Again, you can do it yourself. BVA by entity. Budget versus actual diff by entity in a standard chart of accounts. How hard would that be if you were dealing with multiple entities? Does it run on single entities? Absolutely runs on single entities. Just select the entity or entities you want. And you're going to get consolidated budget versus actual here. It's one example. If I wanted to look at if I wanted to look at it monthly as an example, so here's another hydrated version. So we'd consolidate across all those entities, month over month over month over month. And we have, like I said, 15 permutations of budget versus actual, with budget remaining and budget used, et cetera, so forth. And here's your, YTD, budget remaining, budget used. How long would this take to do this across 1 to N entities, Bill?
Yeah, this is one of the reports that people have such difficulty trying to figure out that their QuickBooks just simply won't give it to them the way they need to see it. And the fact that people look at one row of columns, oh, this is my actual, another row that this is my budget. But then they have no idea of how much their budget they have left, how much they've used, where they are with respect to their budget. This report just answers all those questions.
Easy to do, automatic, just select, preview, you're done. Brad.
Thank you very much. All right, let's move on to polling question number 4. And Charles, I'm gonna grab the screen back from you. Okay. All right. All right. Are you interested in automating the manual processes around analyzing, comparing, and reporting location performance within multi-entity like industry or even single client organizations? Yes, no, maybe I'd like to learn more. All righty. And while we're waiting, Murph, can you guys see my full screen?
Get the presentation there, Brad.
Yeah,
Okay,
we're back on your.
All right. Let me swap it. All right.
There you go.
That's it.
All right. All right. Well, let's go ahead and close this up and see what we got. 45% yes, 28% no, and 28% would maybe and would like to learn more. So that's 72%. So yes or maybe. So great answers. And just let everyone know, everyone's going to get a copy of this deck, and there's hot links in there that I'll go over in a minute that you can reach out and we can go over this stuff with you. All right, number 7. We got about 11 minutes left. Number 7 is launch, market, and scale your advisory offerings with Qvinci's Turnkey Advisor Program. It's called QTAP. Okay, it's a proven framework for launching, marketing, and scaling your advisory services wherever you are, either just beginning or you want to really scale. Okay, you have access to pre-built materials, training, support, a customer success staff. And like I said, if you're just looking to start, we give you a great foundation to start with. If you're looking to really scale, we have that as well. The advisory life cycle, step 1, step 2, step 3, that's the QTAP. Step 4 and step 5, create the future, compare and contrast, are more advanced areas of the advisory life cycle. We're going to focus today on the QTAP. Step 1, review the metrics. Step 2, generate the report. Step 3, spread the word. And this is a very involved program. We suggest you speak to one of our solution consultants, and they can explain to everything with you as we go through it. But this is our view of the whole life cycle. 1, 2, and 3 is the beginner. 4 and 5 is the more advanced. Okay, let's focus on the Turnkey Advisor Program, QTAP, today. It's step 1, review the metrics, the advisory portal, the client wellness dashboard. Charles went over that in the very beginning, where he drilled down from the dashboard to the advisory card, to the underlying reports, to the general ledger. It's review the metrics. Okay, that's for you, the accountant. And step 2, generate some simple reports. Charles also went over with you the automated KPI scorecard, and we also have basic financial reports. Generate some automated business intelligence and reports clients can understand. Okay, and step 3 is spread the word. And we have an advisory services marketing kit in this package, and it's a comprehensive kit. It includes actual and example business intelligence reports for your staff, clients, and prospects. It also includes ready-to-use email templates with simple instructions to copy it to your email provider and copy and paste, and send it out. If it's the prospects, we give some examples of the financial reports and scorecards. If they're your actual clients and you want to drum up some business, you can use your actual data. So I think that is a really good program. And one of the things we've heard from people is, well, why don't you provide more advisory services? Well, a lot of people say, well, because we don't have the resources. So we took care of that. We have a basic user guide for the accountants and staff. We have a marketing kit. We have an advisory portal. We have examples of KPI scorecards. And we have a customer success team here in Austin, Texas, that is going to be there every step of the way. One of our things we like to say is, and we talked about this earlier, when I gave you that statistic that 80% of clients are going to try to provide more advisory services. If you don't provide your clients with advisory service, another accountant will. And Murph, I'd want to know if you or Charles had anything to add into this. I know we're going to go over the QTAP very briefly.
Well, this makes the QTAP makes it so simple. Once again, you all's principle of keeping things simple, and this could not be simpler for a accountant to move from being a number cruncher to being a trusted advisor. And once again, providing that invaluable information that you can get so simply and so quickly out of Qvinci, and then you decide how you're going to bill it. You might bill it on the basis of what it would take you if you were doing it without Qvinci, but you might bill it on the basis of what is it actually worth to this client.
Yeah. But I'll for the accountants, I'll tell you how quick this is, because everybody goes, well, how much friction is there to get started? So you would contact us. We'd say, great, we're going to do it. We're going to do a getting started webinar. We're going to meet with you. You'll connect your QuickBooks files to Qvinci, okay? And we have pre-packaged everything for you. Literally, you could like in 15 minutes after connecting your file, click the download for our pre-packaged most popular metrics, and for that client, and you're ready to send it to them. It's a fast jump start. We'll teach you everything you need to know. We'll teach you how to do all the things you'd like to do, but we've got this ready to rock and roll for you, and your clients are going to love what they get because they're not getting this right now.
Thank you, Charles. Appreciate that, and we're going to go over a lot more in the QTAP next week in the app program, which I'll go over in a minute. Just want to let everyone know that Qvinci sells both Qvinci and QuickBooks in a single package. We have some great deals going on. If you want to buy Qvinci and QuickBooks together, we are the customer success for both of them. If you want to have one throat to choke, we can take care of everything. And full details will be in the deck. So let's recap. What we've kind of learned today. Okay, and it's really how to address common challenges faced by accountants and bookkeepers and advisors when servicing multi-entity or like industry clients, or even single. Okay, it's all about the data. It's near real-time collection, consolidation, and mapping of the client location data. It's establishing and monitoring client-defined standards. It's automate the manual processes, so important. We even have an ROI calculator that calculates the ROI of the difference between doing it manually and doing it with Qvinci. We're going to go over a lot more of that in one of the next future forward sections with Murph and Charles, I think in November and December. We provide the necessary tools and technologies to make this profitable. One of the biggest things I heard early on was, why don't you provide advisory services, or why don't you do a reporting? Because they didn't think they could make money doing it. Well, we're going to show you how. Okay. Next steps, and I'll be quick because I know we're running out of time. This deck is going to have hot links in here. You can click the private demonstration, a live product focused webinar, or a free trial. And we have a special going on right now, $5 per link and sync file for the first 2 months, plus 20% off of onboarding for people that sign up in the next 10 days. When you get the deck, go to this slide, and all these links are hot and allows you to schedule time on our calendar, and we will get right with you. All right, one last slide, then we'll be done. I don't think we're going to have time for questions and answers today because we're about out of time, but App Academy, August 14th, 12 o'clock. I'll be there to go over a lot more of the QTAP and a lot more of the analysis of how we can simply help you become the better advisor and make more money doing it. And that will be on August 14th at 12 p.m. Central Time, 1 p.m. Eastern. Look forward to seeing you there. And polling, let's get polling question number 5 in there, Matt, and then we're going to close it up. What's the biggest challenge in offering advisory services to your multi-entity, multi-location, like industry, or single entity clients? Lack of know-how or resources, lack of vendor support, lack of tools to do it properly, all the above, lack of client demand, or I'd like to learn more. So go ahead and answer that question, and then I think we're gonna go ahead and call it a day. We're not gonna have time to go over a lot of questions. There are a lot of questions in there, but I promise you, our people will grab these questions and reach out to everyone who put questions in the box and answer them. So Matt, let's go ahead and close that up. All right. Great answers. Great answers. Lack of tools, big one. Lack of client demand. Like to learn more. Great answers. Well, we don't have time for questions and answers today because we're about out of time, but I wanted to thank Charles and Murph and our audience for coming in. It's a very educational time today, and I hope we've given you some good tools to think about, and would love at Qvinci would love to help you learn more about being an advisor, a subject matter experts to your clients. So again, Charles, Murph, thank you very much, and everyone else. So I think this marks the end of our webinar. Thank you very much, guys.